Hey gang, Dennis Tubbergen here. It is Thursday, April the 5th, 2018, and I'm here with another market update for you. I have on the screen a CNBC article titled, Epic Market Bubble is Ready to Burst and Stocks Could Plunge, Strategist Warns. Looking at the S&P 500 from the trough of March 2008 until now, the index has risen by 287%. And here's a quote, "This is quite a dangerous situation, and it is creating a bubble. And that bubble has just gotten bigger and bigger and bigger." And if you take a look into the article, then I'm going to show you some charts. This particular strategist that they're quoting is Paul Gambles, who is the managing director at MBMG Group. And Mr. Gambles said that we had a policy response to the global financial crisis, and at that point stocks were cheap. And they had an enormous tailwind behind them in terms of fiscal support. Well, what does that mean? Well, basically, the policy response was simply dropping interest rates to zero, and when that didn't work, they printed money out of thin air. Whenever money is printed, whenever money is created, history tells us that it's going to find a home, and most often it finds a home in real estate and stocks, and I believe that's exactly what's happened again this time. So when Mr. Gamble said we had a policy response and an enormous tailwind behind stocks in terms of fiscal support, basically what he's saying is indirectly that a lot of money was created out of thin air and it had to go somewhere and it went into stocks. He went on to say this is quite a dangerous situation and it's creating a bubble, and that bubble has just gotten bigger and bigger and bigger. There isn't any doubt now. In valuation terms, we're in epic bubble proportions, probably the biggest bubble of all time. I have on past market updates shared with you a chart of the S&P index extrapolated going all the way back to 1872. So it was the S&P 500 preceded by the S&P 90 preceded by another index. At any rate, when you look at the Cressmont price-earnings ratio, which is a smooth price-earnings ratio over a 10-year period of time, there's only 4 times that number has gotten over 30 in history. This is the 4th time. This is in 150 years. It's only happened 4 times. In the prior 3 times, we've seen a massive stock market correction. So we're predicting more of the same here. In fact, I think we're seeing it just getting started here. This is a chart of DIA. That is an exchange-traded fund that tracks the Dow Jones Industrial Average. This is a weekly price chart, and as you can see, this chart goes back to early 2016, so about 2 years. I've drawn a trend line going bottom left to top right across the bottom of the price action. And you can see this uptrend was very much intact and it was significant. In fact, way over here at the beginning of the chart, the Dow was at about 16,000, got as high as almost 27,000, and now it's back at about just over 24,000. However, look at the change recently. 3 weeks ago, we saw the uptrend line get penetrated decisively to the downside, and now we've got a downtrend starting here. Now, if you look at a daily chart, which I pulled up here, this is a daily chart of the Dow, or the ETF that tracks the Dow, and as you can see, we've got a series of lower highs and starting to see lower lows as the recent closing low here of February 6th was just penetrated here over the past week and a half or so. Now, if you look at the most recent chart bar here, this is a daily price chart bar. This is what we call an engulfing reversal. And stocks here are a bit oversold, as you can see from the stochastic indicator at the bottom of the chart. So it would not be surprising here to see a little bit of a rally. However, we don't have to see a rally. We think that the downtrend is in place, and certainly if you're holding stock positions, you should take appropriate actions. That is today's market analysis. It's April the 5th, and I'm Dennis Tubbergen.